No. It's not Ron Burgundy, it's Nathan Birch here. Today reporting to you some questions that have been asked into me from last night's webinar, which I choose to answer for you guys. If you'd like to know more about being involved on a webinar, you can check in at facebook.com/beinvested.com.au to find out when the next webinar will be on. Question I've got here is, hi guys, what percentage yield would you consider as satisfactory in Sydney market as opposed to say Newcastle or other regional areas? Thanks, Jerry. Back down. Thanks for the question, Jerry. As for the Sydney market has obviously moved a lot over the last couple of years. The prices of purchase have gone up, but the rents haven't gone up. And I think there's a big debasement at the moment where I personally believe that over the course of the next 12 to 24 months, rent prices will rise in Sydney. We'll check back in 12 to 24 months and see if rents have risen much over that period of time outside of the normal, and let's reflect on that at that point. Looking in the current market as we enter 2016, I personally feel that entry point into the Sydney market from a yield perspective, I wouldn't be going less than 5%. I wanted to see 5% still. I'm finding 5% plus in the current market. And obviously if that goes up a little bit higher, it could go to 6 or 7 over the course of the next couple of years. Looking at opportunities out there, like I'm building new houses on land and all that sort of stuff, and seeing the opportunity to be able to get 6% yields on building a house on some land inside of Sydney, which is like 100 or 200 grand below market value. So opportunities are still out there in the Sydney market. You just need to be more creative and more open to change your mindset on what you're actually doing as your investing continues. Looking at regional areas, I don't really look at regional areas throughout the Sydney market, like as far as I'd class Newcastle, Wollongong and the Blue Mountains as a part of Greater Sydney. In those areas I still look for 6%, 7%, stuff like that. If we look out in regional areas such as Whoop or Burke or whoever, Orange, Tamworth, those sort of places, I'd expect a 10% yield out there, but I don't look out there as buying because I don't believe that is the best investing strategy going for cash flow. I see a lot of people are saying I want to go for cash flow, but they're foregoing the most important parts of building a property portfolio below market value and making sure it's got upside for growth. If you were looking to buy in a capital city and wanted to make sure that you were getting something that has got growth potential, it's got below market value and a good cash flow, looking in Brisbane and Gold Coast, you can still find 7 or 8% yields in those markets in 2016 as we enter 2016. So the deals are still out there, money's still to be made. If you go to other states, I can still find you properties in capital cities with 10% yields, but it's always a trade-off. So it's important to get the strategy right first and then look at properties that will fit into your strategy as you need to put the parts of the jigsaw puzzle together. If you have any further questions, want to come for a map session, have further ideas from there, either keep watching the videos that you see on YouTube, or you can call the office on 1300 367 925 or email us at admin@beinvested.com.au to come in for a map session and get that strategy right before you pull the trigger on something that could not be the best thing for you. We'll catch up soon. Have an awesome one, and thanks for asking again.